Good day, ladies and gentlemen. Narco speaking. Welcome to another video. If you're new to the channel, please subscribe and stay tuned for free smart money videos. Okay. So before we get into the video, I'd like to announce that the Get Free Daily Setups giveaway is still ongoing. So for you to enter the giveaway, you simply have to just click the link on my bio, IG bio, create and register under Exness using my link, fund $500 or $30 and above, send proof of funded account to me and get your free daily setups. Okay, so what you're going to do is go to my Instagram page and click on the link on my bio. You'll be redirected to a page like this. Okay, so now you're going to create your Exness account under the first link here, and you'll be redirected to your Exness account, Exness page, where you're going to create your Exness account. Okay, so now what happens if you already have an account under Exness? Okay, create another account using your same personal details and documents, meaning your personal ID and your proof of residence, but with a different email. Exness will then verify your account, or you can go to customer support and let them know that you want to be under my IB. Once you're done with that process, fund your account with $500 or $30 and above. Go back to this page and send proof of funded account to my personal Telegram here. Then I'll add you into the Exness VIP group. Okay, so now without further ado, let us commence with the video. Okay, so now in today's video, I'm going to show you how you can go about to master your trading using internal range liquidity and external range liquidity. So okay, so ultimately, internal range liquidity is found within price action as equal relative lows, liquidity inducement trap, and inefficient price action, and also known as imbalance. Okay, so now if you new to liquidity, I'll just pin down a video on the top right corner where you'll find the basics of liquidity and all the secrets of liquidity. So in this video, we're going to mainly focus on internal range liquidity and external range liquidity, how to use them and get profitable in entering your setups and master your setups. Okay, so now in internal range liquidity, you have something like this here, whereby okay, whereby all the internal structure here within your market structure is liquidity. So examples of internal range liquidity come as you can see here, we're in a downtrend. They can come as internal range equal relative lows, meaning that you have something like this, meaning that you have something like this here, whereby you have this equal relative lows here, whereby price needs to sweep out before pushing to the upside. Okay, so here this is going to be your break of structure, and your order block or supply area is going to be at this lower high here. Okay, so now when you have something like this here, just know that this is included as internal range liquidity. Okay, another form of internal range liquidity can be found as your liquidity inducement trap. Okay, so now we have something like this in a bearish trend, whereby price does this, then eventually comes to our okay. So now price does this. Okay, so now obviously this here is going to be your break of structure, and this here is going to be your supply or your order block. Okay, now this here is going to be your internal, your liquidity inducement trap. Why is that so? Because now you cannot take your orders here, because this here is a valid zone. This is going to be your extreme zone whereby you can take your selling opportunities from. Okay, so now also internal range liquidity comes as IPA, which is inefficient price action, also known as imbalance. Okay, so now you find that we are in a downtrend again. We are in a downtrend like this, and price does this. Price does this. Okay, so now price does this. Obviously here this is going to be your break of structure, and here you find that there is imbalance or IPA. IMB or your IPA. Okay, now price has to fill this IPA before price can push to the downside. Okay, so now price has to fill this imbalance or IPA before price can push to the downside. So meaning that here you are going to find your order block or your supply area. Okay, and I think that's it for internal range liquidity. Before we move to our real market example, let me just explain in external range liquidity. Okay, so now with external range liquidity, for instance, we are in a bearish trend. We have strong lower highs and weak lower lows. Our lows are weak because they are external range liquidity, meaning there is liquidity resting below. Just missed something here. There's liquidity resting below those previous lows. Okay, so now going back to the fundamentals of market structure. So market structure, we know that when we are in a bearish trend, we know that we are breaking our lower lows and respecting our lower highs. Okay, meaning that when each and every time when we break our lower lows here, we know that we have a sweep of liquidity, and now after the sweep of liquidity here, we now know that price needs to turn back and push to the upside to respect our lower high. Okay, same thing again, price pushes to the downside, gets a sweep of liquidity here, and then price needs to push back to the upside to respect our lower high. Simple basic stuff of our bearish trend. Okay, now that's how our break of structures are formed. Okay, so now immediately there is a sweep of liquidity of our lower low. We know that here we have a break of structure. Okay, we have a break of structure. That's the first type we have of our external range liquidity. Our second type of external range liquidity comes in form of trend line liquidity, whereby we have this little trend line here, whereby it can be a form of a wedge or something like that. This here, the one I'm drawing right now, it's a form of internal range liquidity because it's within this price action here. Okay, so now the second time comes in a trend line liquidity, whereby this trend line liquidity here has to be swept out before price pushes to the upside to mitigate our order block or supply area. Okay, so now here we have this supply area, and here we have another supply area or order block. Okay, so now we know that in a downtrend we are respecting our lower highs and breaking our lower lows. Okay, so now our third type comes in form of equal relative lows. Okay, so now every time we have this equal relative lows, we know that price needs to push to the downside and clear out this liquidity here. So for instance here, price clears out this liquidity and continues in a bearish trend. Okay, so now we know that after this liquidity has been cleared out, price needs to push to the upside to our order block, then push to the downside. Okay, so now here we are going to have an order block. Okay, so now all this here is external range liquidity. Okay, now so if we are going to like put all the things together, okay, so this here is going to be our, this here can be our trend line liquidity, which is internal range liquidity. This here, if you can push this to the downside like this, it can be a form of inducement trap, whereby it's also internal range liquidity. And also this here can be a form of, if you can just modify this like this here can be a form of relative equal highs, whereby it's also a form of internal range liquidity. So that's it for the theory part and the textbook examples. Now let's move to our real market examples. Okay, so now here we have NZD on the daily time frame. Okay, let me just clear out this. Okay, as you can see here, we have NZD on our daily time frame. We can see that NZD has been pushing beautifully, bearishly so, in a bearish trend. Whereby we are disrespecting our lower lows and respecting our lower highs. Again, disrespecting our lower lows and respecting our lower highs. Okay, so now we know that, okay, since we have this, we are looking for selling opportunities and not buying opportunities, because we are in a bearish trend. Okay, so as you can see here, price broke this low here. Immediately when price breaks this low here, we know that this here is our break of structure. Okay, let me just do this. Okay, so we know that this here is our break of structure. So we know that this here is our break of structure, and we know that now we are in a bearish trend. Okay, so immediately when we have this, we can look, we know that now price has to come back here and respect our high. Okay, so now let's play price and see what happens. So as you can see there, price does not break our high. Okay, and price initially just respects our supply area here, and now all this here is found as internal range liquidity. Let me just go to the 12-hour chart so that you can see it nicely. Okay, so now this here, all this here is found as internal range liquidity. Internal range liquidity, meaning that these zones they should be broken before and swept out before price can push to the downside. Okay, now now we can see that price broke our previous low and gives us what? Gives us our break of structure here. Okay, so now we are expecting the same thing since we are in a bearish trend. Okay, and we know that since we are in a bearish trend, we don't want this high to be broken. Okay, now let's play price and see what happens. Okay, so now I can see that price can respect this high here, which is our weak entry. Okay, let's move to the lower time frame and see. Okay, so now since price respected this area here, we know that here we have this internal range liquidity here and also here. These here are just internal range liquidity, meaning that price needs to sweep out these liquidities here before price can push to the downside. Okay, so now let's play price and see what happens. Okay, so now another example with this change of character here. Let me just take price back to here. So now mind you, we still have this weak entry here. We can call that our order block. So moving on to the lower time frame. Okay, so we can see that here we have this break of structure here. We have this break of structure and we have this change of character. Okay, and now we have this beautiful entry here. Okay, now let's see what happens. As you can see, the price just taps us in, and when price taps us in, it clears out all the liquidity lying just below our supply area, just below our supply area. And mind you, when price taps us in here, this here is going to be our external range liquidity. This low here is going to be our external range liquidity, because now we are ultimately in an unconfirmed trend. So for a trend to be confirmed, we need to have two or more highs and lows. Okay, so now let's play price and see what happens. Okay, so price eventually pushes to the downside, clearing out our external range liquidity here. Okay, so now let's play price and see what happens again. Just looking for something. Okay, now we have something like this. We have something like this. Okay, now we know that this external range liquidity has been swept out. Immediately when we have this here, we know that this here now is going to be our break of structure, because and now we are in a confirmed bearish trend within our higher time frame entry here. So mind you, we took an entry of this order block, and now we took confirmation entries here at this supply area here. at this supply area here, and now we are looking to take entries here at this order block here. Okay, this order block here. Okay, now a perfect example again, this here, let me just play price and see. Okay, as you can see there, price sweeps out our internal range liquidities here, before price taps us into our order block and pushes to the downside. Okay, and now we also have this equal relative lows here, whereby it's external range liquidity, and price needs to sweep this out before price pushes to the upside to maybe to continue into our bearish trend. Okay, so now let's see what happens. As you can see, the price eventually sweeps out our equal relative lows there, and eventually price pushes to the downside to sweep out this external range liquidity here at this low here, and ultimately when it sweeps out our liquidity lying at this low here, we know that that's where we are looking to take profits. Okay, so I think that's it for today's video. Just a recap: external range liquidity and internal range liquidity. Let me just go back to those. Definitions. Okay, so just a recap: internal range liquidity is found within price action as equal relative lows, liquidity inducement trap, and inefficient price action. And external range liquidity, for instance, we are in a bearish trend, we have strong lows, lower lows, and weak lower. We have strong lower highs and weak lower lows. Our lows are weak because they are external range liquidity, meaning there is liquidity resting below those previous lows. Okay, so now please make sure that you follow me on Instagram for free smart money educational content, and do check out our free Telegram channel. Our link is in my bio. We share daily analysis and signals. Okay, so if you have reached this far, please let me know how was the video and which kind of videos you would like to see on my channel down in the comment sections. Please subscribe, click on the bell notification button, and so that you can get notified every time I drop a video. So see you guys in the next video. Peace.